Hey everyone, let me ask you a question. If you suddenly had $1,000 show up in your account today from a bonus or any other source, what would you do? Would you invest it all at once or spread it out little by little every month? That's exactly the question that confuses almost every investor, SIP or lump sum. And in today's video, I'm going to make this so clear that you'll never have to ask this question again. So stick around till the end, because I'm going to share a trick that big investors use, one you probably haven't heard before. 035. What is SIP? Let's start by understanding what SIP means. SIP stands for Systematic Investment Plan. Instead of investing a lump sum all at once, you invest a fixed amount every single month. Let's say you start a SIP of $100 a month. That amount automatically gets deducted from your bank account and invested into a mutual fund every month. The biggest advantage here is that you don't have to stress about timing the market. Whether the market is up or down doesn't really matter, because you're investing the same amount consistently, month after month. 115. What is lump sum? Now let's talk about lump sum investing. Here, you invest the entire amount in one go. Say you received $10,000 from somewhere, a bonus, an insurance payout, or maybe from selling a property. And you invested that entire amount into a mutual fund or stock all at once. The advantage is, if the market goes up right after, your entire investment benefits from that growth. But the risk is just as big. If the market drops right after you invest, your whole amount takes the hit at once. 2 o'clock. What's the real difference? Now here's where it gets interesting. The real difference between the two isn't just about method, it's about risk management. With lump sum, you're putting your entire bet down at once. If the timing is right, the returns can be incredible. But if the timing is wrong, the losses can be just as significant. With SIP, on the other hand, there's a concept called rupee cost averaging or dollar cost averaging, as it's known in the US. This means that when the market drops, your fixed monthly amount buys you more units. And when the market rises, it buys you fewer units. Over time, this balances out your average purchase price, so you don't have to worry about market ups and downs. That's exactly why most financial advisors recommend SIP to new investors, because it relies more on discipline and less on emotion. 250. Which one should you choose? So the real question is, which one should you pick? The answer depends on your situation. If you have a fixed monthly income, SIP is the way to go for you. You'll set aside a portion of your earnings every month and keep investing consistently, without worrying about whether the market is up or down. But if you suddenly come into a large sum of money, like a bonus, a gift, or an old investment that matured, that's where the real question comes in. How do you invest that? 325. The secret trick big investors use. This is where I share that trick I mentioned earlier. When you get a large sum of money all at once, experts usually don't recommend putting it all in as a lump sum. Instead, they use a strategy called STP, Systematic Transfer Plan. Here's how it works. You first put your entire amount into a liquid fund or debt fund, where the money stays safe and earns a bit of interest. Then, a fixed amount automatically transfers from there into an equity fund every month, just like a SIP. The advantage is that your money doesn't sit idle. It stays safe and keeps growing, while also gradually entering the market, which reduces your risk. In other words, you get the speed of lump sum investing combined with the safety of SIP. 410. Ending. So next time someone asks you, should I do SIP or lump sum? You can confidently say, the question isn't which method is better. The question is, what's my situation? If you have a steady income, go with SIP. If you have a large sum, go with STP. That's the smartest approach. If this video helped you, hit the like button and let me know in the comments. Are you currently doing SIP or lump sum investing? And if you want to dive deeper into STP, I'll break down the full math in my next video and show you exactly how it can boost your returns. See you in the next one.